On average, the government prints $6 billion per year. $6 billion, which relates to an average of 3% inflation, which means the money that you have saved currently is worth 3% less every year. Meaning, if you had the mindset of, I'm gonna just start saving my money, keep it in my bank account, and let it grow that way, your money is bleeding without you even knowing. Since inflation is around 3% a year, that means the money you put in your bank account is worth 3% less every single year, without you even spending it. And this 3% number is actually only getting bigger and bigger. If we go back to say 2022, the government printed a ton of money, a ton. The inflation rate was 9.1%, which again, if you put $100 in your bank account that year and just kept it there, it would actually only be worth $90 the next year. I know, it's pretty scary. That's exactly why instead of just saving your money, you need to have that money working for you and invest it instead. If you have only $100 and wondering how you can grow it to 1,000, 10,000, or even 100,000, I'll be sharing my best techniques I use to invest, but here's the thing. As we go throughout the video, the risk of the investments is only going to increase. But just remember, as the risk goes up, so does the potential reward. I'll even be putting my own money where my mouth is and invest $100 in everything I talk about in this video. And I'll even be sharing how my investments are doing live on my Instagram. The first and probably easiest way to invest your money is a high yield savings account. Now look, a normal bank account basically pays you nothing. The average bank account pays you around 0.01% a year, which is basically pennies. A high yield savings account pays you literally for just keeping your money in there. At the making of this video, American Express offers 3.2% annual returns, meaning you get 3.2% every year of whatever you deposit there. You don't need any skill, no trading experience, it just sits there and grows by itself. Just by doing this one simple thing, you are now stopping your money from bleeding every year from inflation. If all you did from this video was just follow this one and only step, you would already be beating the inflation problem. It's also probably one of the safest investing options too, with a risk level of 1. Because if you choose a high yield savings account with a major bank, do your own research, but most likely that bank will be what's called FDIC insured. Meaning if you have $250,000 or less in that bank account and the bank goes out of business for whatever reason, the government will insure up to $250,000. So yeah, it's a pretty safe option. It's not gonna make you rich, that's not the point. The point is you just stop the bleeding. But as we go throughout this video, the profits are gonna get higher and higher. Now, you might be sitting there thinking, how does the bank make money if they are paying you 3.2% every year for depositing money into their bank? The answer, bonds. A bond is basically just a loan to a government. You pay the government up front and they give you a percentage in return later. What a lot of banks do is take the money you deposited, put it in US bonds, which pay a bigger percent than what they are paying you, and just keep the difference. At the making of this video, a 1-year US Treasury bond pays 3.79%, and if you remember, American Express pays you 3.2%. So yeah, that's how they make money. And just like the banks, you too can invest in bonds. Now, there's a lot of bonds to choose from. There's bonds for different countries, bonds for companies, bonds for states, and so forth. All of them pay different percentages, and all of them have different risk levels. What I'd recommend is just do US Treasury bonds, as they are one of the safest options. I would also put this type of investing at a risk level of 1. You are technically making more money with these than a high yield savings account, but it does come with a slight drawback. Unlike a high yield savings account where you can withdraw your money whenever you want, a bond has a maturity date. You can choose 3 months, 6 months, 1 year, 2 years, and so on. Meaning if you invest in a 3-month treasury bond, you cannot touch that money for 3 months. But at the end of that 3 months, you can withdraw it and you get a higher percentage than you would with a high yield savings account. The majority of millionaires and billionaires own bonds because of how safe they are. A really good goal to have in life is to get $5 million, because if you have $5 million and just invested it all in US Treasury bonds, you would get $190,000 every single year for doing absolutely nothing. And it's not like the stock market where you have a chance to lose that money. Bonds are basically risk-free. So Yeah, that's how the rich stay rich. I invest in bonds, and I'd highly recommend you do too. Gold. If you haven't been living under a rock for the past 10 years, you've definitely heard about gold, and there's a reason for that. Unlike money, where the government can just print more of it and it loses value, gold is a natural resource, meaning there's a limited supply of it. If you invested $100 in gold in the year 2000, that $100 would now be worth $1,200 today. Before the dollar back in the day, we actually used gold as a currency. It's a pretty safe way to invest your money, putting it at a 3 out of 10 on the risk scale. The only real risk with gold is opportunity cost, meaning if you invest your money in gold, that means you can't invest that money elsewhere that might have higher returns. The only real time you should be investing in gold is if you think the economy is going to do bad in the near future. Gold performs best when economies are doing bad. So if stocks are going down, usually gold is going up. If stocks are doing good, usually gold is doing bad. Gold is good if you want a way to hedge the market, meaning you want a way to protect yourself just in case the economy does bad. I wouldn't recommend going all in on gold, but it's always nice to have a percentage set aside just to hedge the market in case things go south. There are two ways to invest in gold. One, you can go to your local gold shop, buy physical gold like a gold bar or necklace, but I wouldn't recommend this, as usually these store owners raise the price so they can make a profit, so you technically aren't getting your full value of what you purchased. The second way is investing into a gold ETF. I'd recommend this ETF called GLD. Just go onto your broker. I like to use an app called Webull, search GLD, and now you can invest into gold. Now this is where things start to get juicy and we start seeing some really good returns. Index funds. Index funds are one of my personal favorites to recommend to beginner investors because you don't need a lot of skill to do it, and the average gains are still extremely high. An index fund is basically a fund with the largest companies in the United States inside. So think Apple, Facebook, Microsoft, and so on. You basically are investing, say, $100, and that $100 gets divided up and gets put into each one of these companies. Overall, the risk is pretty low because you aren't putting all of your eggs in one basket. Because even if one of the companies ends up doing bad, the ones that do good will average out the losers. The average returns of an index fund are around 10% a year. I'm gonna put index funds at a risk level of 4. The trick is you need to think long term with index funds. Let me blow your mind real quick. If you are 20 years old right now and invested, say, just $27 every single day into an index fund until you're 60 years old, based on average gains, you would have $4.6 million. $27 a day for 40 years doing absolutely no work at all, you would have $4.6 million by the time you retire. That is the power of index funds. The good thing about this, you don't need any experience with the stock market. The trick is you're not trying to time the market and find perfect entries, but you just invest a little amount every single day, no matter if the stock market is going up or down, and just forget that money even existed. Don't even look at that money till you retire. If you invest enough and are patient enough, you could easily become a millionaire with very little risk and basically doing no work at all. All you need to do is find an index fund with low fees. I personally use the index fund called VOO. Just go to your broker like Webull, type in VOO, enter the amount you want, boom, you can now own an index fund. Now we are starting to get into the range of a little more risk, but the returns are now starting to get really good. ETFs. Now technically index funds are ETFs, but when I say ETFs for this video, I'm talking about more specific categories. There's ETFs for literally everything. Tech, copper, real estate, literally everything. ETFs are usually a lot safer than picking a single stock because, again, you are diversifying across multiple companies. If you do it right, you can make a lot of money if you pick the right ETF. But till this point in the video, we really haven't needed much skill in investing with all the previous examples. But at this specific point, you need some sort of knowledge or investing experience. When choosing ETFs, you can definitely choose winners, but you can also choose losers. I like to have the same long-term mindset with these as well. Just think of a category in the stock market that you think will do very well in the next 10 years. This is when the skill starts coming into play. Again, we aren't trying to time the market with this and find the perfect bottom. All we do is invest a little amount every single day into a category that we we think will do good in the next 10 years. One example could be quantum computing. Now look, quantum computing is getting better and better by the day, and in my eyes, it's only going to get better. And I personally think it's going to be a big part of our future. Is this investing advice? No, I'm just using it as an example of what I'm personally investing in. Now, instead of just picking one quantum computing company and betting just on that one company, which is very risky, I can just invest into a quantum computing ETF that divides my money, invests in multiple quantum computing companies. For this, I personally like the ETF called QTUM. QTUM has 88 quantum computing companies within it. So now when I invest into this ETF, my money gets divided throughout all 88 companies. Individual stocks. Instead of buying ETFs or categories of the stock market, now we're using a lot more skill in choosing individual stocks. There's a certain amount of risk that comes with buying individual stocks, because while yes, you can choose good ones, you can definitely choose bad ones too. I'm gonna put it at a 6.5 on the risk scale. But if you pick companies well, it has the potential to make you a shit ton of money. For example, the company SanDisk has been skyrocketing recently. It's up 3,700% in a year. That's insane. To put that in perspective, if you invested just $25,000 last year in SanDisk, went on the beach, forgot about it, and did absolutely nothing, that $25,000 would be worth $1 million today in just a year. Yeah, that's insane. But buying individual stocks has a place in my heart, because for me personally, this type of investing has performed the best for me in growing my wealth. Last month in April, I had one of my highest performing months in my trading career. I made $247,000 in April by trading individual stocks, with one of my highest performing stocks being AMD. I'm not saying this to brag or show off my wealth. I'm showing this to show you the possibilities and why you should start taking this trading stuff seriously. If you do decide that you want to start taking this seriously, I actually have a private Discord where I share all of my trades in real time. Exactly what plays I'm getting into, when I'm entering, when I'm exiting, and the reasoning for why I'm entering into the trade in the first place. I shared every single trade I took, like my AMD trade, Nvidia trade, and my QBTS trade, and every other trade I took in order to get that $247,000. If you're interested in joining, I'll put a link in the pinned comment. But trading individual stocks can be a great investment if you do it right. If I had to pick a stock that was going to do good in the next 7 years, I'd like to think it would be Amazon. Companies like Amazon are only going to benefit from the AI boom. They will no longer have to deal with labor strikes because they will have robots moving all the boxes. They will have autonomous cars doing their shipping, and overall they will become way more efficient in the next 7 years, in my opinion. Less money on employees and more money into efficiency. Just my opinion, not investing advice. On to the next. Crypto. If you invested $25,000 in Bitcoin 10 years ago, do you know how much that would be worth today? $4 million. $4 million. I'm gonna put crypto at an 8.5 on the risk scale. Major companies like Microsoft had literal board meetings on whether or not their company should invest into crypto. And sadly, Microsoft's board specifically decided not to do it because of how risky it is. But with more risk does come more reward. There's been plenty of crypto coins out there that have gone up 10,000% or more. I know a ton of people that have made millions in crypto, but crypto is way more risky compared to stocks because of the volatility. Meaning, when crypto goes up or when it drops, it does it very, very fast. Honestly, if you trade the major crypto coins like Bitcoin or Ethereum, the risk is a little less because those coins are likely to stay around in the future. But where it starts getting risky is when you invest in altcoins like Fartcoin or Dogecoin. These coins do have the possibility of giving you way higher returns if they do well, but the risk starts coming into play a lot here because the majority of these altcoins don't end up staying around for very long, and they don't just drop 10 or 20%, they usually go all the way down to zero. zero. So you're basically gambling at that point. But if you have a little luck and a little skill, the potential to make a lot of money is definitely there. These are my favorite ways of investing. I'll be sharing how all of my $100 investments are doing on my Instagram as time goes on. One of my favorite quotes is, if you don't have your money working for you, you will be working the rest of your life. If you take anything away from this video, it's that no matter whether it's high yield savings account, index funds, stocks, you need to have your money working for you. And if there's only one piece of advice I could give, it would be start today and not tomorrow.